Hey, it's Michael Griffin here, Wealth by Real Estate. I don't have Brianna with me, but so I'm gonna try to do this solo. Got a bunch of feedback and questions regarding one of our posts we recently did on TikTok. And so we wanted to scroll through and answer as many questions as we can that we weren't able to answer on the TikTok page itself. So here we are. So first question that we have teed up is from Gianni Bravo 15. Thanks for commenting and asking a question. He asks, what do you need to get started with investment properties, and what is the best thing to start with? Well, Gianni, I think that you do need a little bit of your own money to be able to get started. Generally, if you buy an investment property, you're going to have to put 20% down. Now, some people may already have a house that they own and they live in. The easiest way to get started is to move and retain the old house that you currently live in and rent that out. I think that's by far the easiest way. Not only that, but you can buy a house as your primary residence. And with that, you don't have to put 20% down. You could put as little as 3% down or 0% down if you're doing a VA loan. In which case you can have two properties and you put very minimal amount down on both of them. That being said, if you wanted to go buy a residential property, I would say as your first investment, buy a condo or townhouse. The barrier of entry is a little bit easier, the price point's a little bit lower, and the HOA generally takes care of the exterior of the property. That being said, I think you should probably still do the property management yourself. So you learn how to do that and what that entails. A lot of times people are scared about the property management piece, but I can tell you, owning several, 20, 30 properties, that the property management is not that labor intensive, that it's actually very easy, and you won't know that unless you do it yourself. The next question we have is from Jardo83. Thanks for asking this question. How do I go about getting a second or third property without having to put 20 or 25% down? Well, to tell you the truth, you can't really. I mean, lenders generally require 20% down. However, we do use the BRRRR method. We've talked about it in previous videos. BRRRR standing for buy, rehab, rent, refinance, and repeat. So we'll buy the property using hard money or private money. Private money is 0% down many times, and hard money you can go as low as 10% down. So you don't actually have to put that 20-25% down right up front. Some hard money lenders do require that, but some don't. So say you put 10% down, you go rehab the property, you're creating additional equity and creating value in the home. You rent it out and you refinance it. And by that time, hopefully you would have additional equity that you can pull out. You can pull out your original 10%. And so really that property costs you zero money when you're all said and done. So that's a pretty creative way of putting a little bit of money down, or no, if you get private money, and then being able to take it back out when you're done with the refinance. This one's from Dante Did What? We always hear the wins. Actually, he messed this up, the wording a little bit, but that's okay. I understand what you're trying to ask. What was the biggest challenges? What's the biggest loss you took in the home flip? Great question. I think the biggest challenge is finding the right contractor. They can cost you a lot of money. They can cost you time. In the beginning, when one of our first flips, we used a contractor that, he wasn't very experienced, although he was a great guy, and he did a lot of the work wrong. And so we went to go sell it. There was a ton of inspection items that took forever to fix because he didn't even know how to fix them. And overall, we lost money on that flip because it took so long and cost so much money to redo the work he already did. Also, we found a contractor one time that got overwhelmed, and thankfully he had insurance, and we made him get insurance. So this is a big key. He walked off the jobs and basically took all of our draw money up front. And, if he didn't have insurance in place and we couldn't sue him and get that money from the insurance company, we would have been lost. We would have lost a lot of money. So really finding the right contractor, making sure they're insured, making sure they're licensed in many cases is going to be one of the biggest things you could do for yourself to make sure that you reduce your liability. And that's been one of the biggest challenges for us. Great question, by the way. This question is from Nori Mac Cars. How did you manage to acquire so many fix and flips? That's a lot of volume. I'm doing my second one now, but doing most of the work myself. Well, when you're doing the work yourself, you can only do so much, right? You only have a certain amount of time. You only have a certain amount of resources. For us, we don't do any of the work ourselves. We have a team of contractors that now do the work for us. We barely even supervise. They have supervisors on their staff to make sure that the work's done well. We occasionally walk properties to make sure that it is done well, just to double check. But really, it's about having the right team, having people that are in place that know what they're doing, and making sure that those people are accountable to make sure that you can scale up. You can't do that if it's just yourself. Next question is from Loans by Sean. It's so hard finding good deals. How do we get started looking for them? It is extremely hard. I mean, this market is super tough. Right now, you're competing against regular home buyers that are willing to take crappy properties because there's just no other properties available for them to buy. So you're competing against them. So you have to make your offer super strong. You know, ours are all cash. We do quick closes. You know, we allow the sellers to leave any property behind that they don't want to take with them. It's as is. We don't even do an inspection. So that's a pretty strong offer when we're competing against others. So really, you got to find the deals. Once you find the deals, you have to make your offer strong. In order to find the deals, we also, you know, use a great realtor, which is ourselves, to make sure that we can source deals on the multi-listing service, the MLSs in your local area. And we scroll through and try to find the crappiest properties for the least amount of cost. And then we make those strong offers on them. We also buy a lot of properties from wholesalers. So get on Facebook, go to groups and find wholesalers in your area. A lot of them are shopping properties that are really good deals. We buy a lot of properties that way as well. So you got to be creative with where you source your properties, but you can find them because they are out there. Next question is from Miss Officer 11. Do you have any experience with cash out refis? And by the way, I love your content. Hey, I appreciate that. We're trying to put the best content out there as we possibly can. In regards to cash out refis, yes, we have had experience with them. You know, we do have lines of credits on a lot of our properties, actually the vast majority of them. Lines of credits are generally used for short-term turnarounds. Lines of credits or HELOCs generally have variable interest rates, which means that you don't want to use that for a long-term hold because that interest rate can go up at any time. And at that case, you would want to use a cash out refinance. You pull the equity out of your home and then you're able to use that for a longer term investment. Say you have a $500,000 property and that's the appraised value. Say you owe $300,000 on that. Well, you know, most lenders don't allow you to pull out more than 80% loan to value, meaning, you know, if it's worth $500,000, your maximum loan amount will be $400,000. You have about $100,000 of equity in that home. You owe $300,000, they'll let you pull out $100,000 because your home is worth $500,000, right? So you could take that $100,000 and put that into a fix and flip. You can put it into a long-term investment. You can put it into an Airbnb. So that cash is yours. And not only that, when you do a cash out refinance, that interest rate that you're getting from your loan is a fixed rate generally. So that way your payments will never increase, right? So I think that's a great question and a great way to source funds to buy an investment. The next question is from Andrew G, 818. How did you guys get started in this journey and were you guys real estate agents at first? Yeah, I mean, I've been doing this for 20 years. Started fix and flipping in 2005. And you know, being a real estate agent's pretty key a lot of times in order to save money. So if you're thinking about getting your license and being an investor, I think that's a great idea. Or if you are a real estate licensed individual, you know, getting into the game is a lot easier. There's a lot less barriers to entries. You're able to source properties online because you have access to the MLS. You know how to analyze properties to see if they're a good deal. You can pull comparable properties and see what the ARV or after repair value is. So having a license and having access to the MLS is a huge bonus when you're investing because you know you have access to information. Not only that, it's kind of nice that when you purchase a property that's on market, you also get the commission. So right off the bat, you're getting a 3% bonus just for buying the property, which can help you pay for some of the fix-ups and costs of the rehab, or pay for the interest on the loan that you're getting on that property. So yes, I think being a real estate agent is a great idea. It's something we did at first, and something that can really help along your journey. Next question we have is from Harch and Kermi. What's the fastest way to achieve cash flow? Well, I think short-term rentals is by far the one medium that I found, and I've been doing commercial and residential real estate for 20 years, to be the fastest and highest return on investment that I found in either residential or commercial properties. It's something where you can buy a house and turn around and fix it up a little bit and put some really nice furniture in there and create a large amount of cash flow pretty quickly. Long-term investments generally are not cash flow plays. Those are appreciation and depreciation plays. So if you want to get cash flow quickly and you want to do a lot of cash flow, I think short-term rentals is a great idea. The next question we have is from awalters83. What's the toughest thing to deal with that no one told you about? Well, going back to the beginning, it's not really a specific thing that I thought was tough. I think the tough part was actually getting involved, actually thinking about what kind of investment I wanted to invest in, how do I go about it? What you don't know, you don't know, right? And so how do I go about finding the information to make sure that the risk is less, because now I'm educated about it? And I think that was a big barrier to entry for me in the beginning, was how do I get started? What do I get started in? That's a lot of the questions that we get asked. And really it's about educating yourself, understanding the risk involved in each investment, minimizing your risk by learning about it and understanding the risk involved, and then actually doing it. Because you can learn all this stuff all you want, but unless you actually take the leap and take that risk, you're never going to be wealthy, and you won't have that long-term generational wealth that everybody seeks. And the next, that was the last question. Well, hey, I appreciate it. We're going to do this more often. We really love these questions because we love to teach people and love to help people learn about how to invest. A lot of people don't understand how to jump in or may have simple questions. And so we appreciate you dropping us a line so we can help you get involved and hopefully help you build that generational wealth. We have a private Facebook group that you can definitely join in if you want to get more in-depth conversations and answers to some of these questions. We have a lot of like-minded individuals that are in this group that are able to also answer questions or ask questions that you maybe aren't even thinking about. So definitely look that up, Wealth by Real Estate. Definitely like and share this content if you think it's valuable to you or anybody you know. So appreciate your time, guys, and we'll be talking to you soon.